Yo, yo, what's going on, everybody? Let me see. Hold on. Let me see if this is like working. Is this on? I think this is on, right? All right. I think it's good to go. Awesome. Cool, cool. All right. Hold on. Let's go on and do this real quick. All right. All right, y'all. I'm going to go ahead and get into this first. Um, so I'm question for you guys. How many of you guys are trading futures right now at this moment? I'm pretty sure most of you guys are trading futures. Some of you guys are trading options with me. I'm pretty sure some of them, well, some of you guys like I know Kuya Pao and Atizia are trading options with me. But so majority of you guys are here because you guys are trading futures. So what we're gonna do today, we're gonna completely dive headfirst into futures. All right, I'm gonna do an options video. Uh, I'm gonna do an options video next time. But first things first, now first things first. One happy Saturday. Thanks for everybody tuning in live whenever we trade. I appreciate that. That shows me that you're serious about it, right? About making money and learning. And number two, if you're watching the recording, that also shows that you're serious about learning. Also, because you are taking time out of your day to watch it, right? So even though you couldn't make it, but at the end of the day, you're still watching the videos. That's why I'm making this video, so that everybody that you know that needs time, that doesn't have time, especially when they're still in their day job, they can still watch it at the end of the day, right? Even though you guys couldn't make it, right? Now, what we're gonna do here is I'm gonna go through this presentation to trade futures, right? So, because I'm pretty sure most of you guys are trading futures, but no one really is giving you a whole big breakdown to everything, right? So it's just like I'm gonna explain everything in the video. So all you guys gotta do is just sit back and relax. And then I don't want to hold too much of your time. I'm pretty sure you guys got a lot of stuff going on your Saturday. Um, without further ado, because anyways, I'm getting too off topic. This is the introduction to futures, and we're gonna go straight into it. Get this cracking lacking, and then what we're going to be covering today is number one, we're going over features, what they are. Number two, we're gonna get how they work. Three, we're gonna get what point size and tick size mean. We will get into different futures markets, get into why you should trade futures, risk that comes with trading futures, and what beginners should know. Okay, so that's what we're gonna look forward today in terms of this lesson. Without further ado, let's get it. All right. So with futures, what are they? What are they? So futures, they are essentially an options contract with no Greeks. Okay, that's pretty much it. They are like options mom and equity dad had a baby. Okay, if that makes sense. Essentially, it's just a contract that buys a purchase or sell an asset at a predetermined price at a specific future date. Now, what happened is there is no expiration. It says a specific future date, which there is a future date. That date is not defined as the same as the options are. So, versus options, when that time comes, that you're fucked, right? So it's just because the date is called basically a rollover period, and they will give you time to exit your position. Versus options, when that time comes, you're kind of messed up, right? And then they are standardized and traded on their own individual exchanges. But with futures, though, there is no expiration because once it expires on options, if you're trading options like on Robinhood and stuff, it's gonna either expire worthless or you're gonna have to exercise it when that Friday comes or whenever that expiration does come. Because they will give you the opportunity to roll over on futures and you'll be good to go. Okay. So as far as futures goes, it's a good medium between options and equity. There are no Greeks like options, but it moves similar to equity. You know what I mean? To where like it's just buy and sell, like that simple, right? If you want to go long on futures, you buy. If you want to go short on futures, you sell. Same way as equity. So so they are standardized and they are traded on their own individual exchanges, which would be what is it called? CME, which is important. Which is important because I want to talk about it real quick. Is because if you're on TradingView and you do not have like the real-time data package, and that data package that you're gonna want is going to be like that CME exchange. So that way you can have real-time futures data. And if you're trading futures, obviously that is important, okay? Now where now next futures. They work in the same mechanics as equity term of how they trade. My bad. If I sound like this, I just woke up. I'm sorry, guys. What I mean by this is that when you're trading futures, for example, right, what we're looking for, if we want to go long on something, we want to go long. What we're going to do is we're going to press buy, right? If we're going to exit our long, enter, we're going to press sell. If we want to enter a short position, we're going to press the sell button. If you want to exit that short position, we're going to buy it back, right? So what happens, right? When you go long, right? When you go long, right? Let's say you go long at say for example 6400 on ES, right? ES moves $50 per dollar, if that makes sense. You go long, you go long on you go long on ES 6400, right? That's your baseline. ES moves $50 per dollar. Let's say if you get a $10 move, right? You catch a $10 move, $10 move, and we go up 64, 64, 10, right? You bought at 6400 and there's a $10 difference. We're up $10. So it's going to be, how do you say this? 10, right? 10, 10 times 50. Dude, this is, I'm so new to this. This a little software I downloaded. But 10 times 50 equals, what's 10 times 50? 500, right? So you just basically pocketed the difference between 6400 and 6410, which is a $10 difference, which is you multiply 50 times 10 because you move every uh moves $50 every point, and then you basically made 500 bucks, right? Because you just pocketed the difference between 6410 and 6400. Same way as going short. Let's say if you went short at like 6600, 6600, and then you bought it back at 6590, that'll be a $10 difference. 10 times 50, you would have made 500 bucks. The way shorting works is that you're essentially selling a position short, you're borrowing it, right? In anticipation that the stock goes down or the futures contract goes down. Your betting market could go down. So when you're shorting up here to 6,600 and it goes down $10, you pocket the difference, which is 10 points times 50 equals 500. So if you're trading MES, which is minis, you would simply subtract 0. So it's just going to be 50 because the futures contract is less, right? What's what's important about the whole execution aspect of futures is, is making sure you're doing the right one, right? When I was first trading futures, I made a mistake. I'm sure you guys did as well. I know some of you guys did as well, but it's important to know what you're doing because you would probably at first when I was trading options, I when I first trading options, I would buy a put, but over here, to enter a short position, but for here, you're going to have to sell first and then buy it, like do the opposite. What I did was I bought on accident and then I sold when I was trying to go to a long position, a short position, sorry, which was funny, and I know some of the new traders. I know I'm not gonna say their name, but some of you guys have actually done it also. It's good to know it right away. To under to under it's important to understand that when trading futures, if you want to go short on options, you buy, right? You buy an options contract, which is buying a put. When you want to go short on futures, you sell to enter, okay? Just don't forget that. Mistakes will be made, but try to remember to avoid making that mistake. But those are the mechanics in terms of executing on futures, okay? Because you don't want to make that mistake, especially when there's gonna be a huge move. You just don't want to miss that move by doing one simple mistake. So now um, next, this is very important, okay? This is very important. Now, all of these listed here are based off minis, okay? Are basically our minis. We're gonna get in micros as well. These are minis. These are minis, okay? These are minis. Um, these are minis, but we will get into micros, but these aren't minis. But you have to think of minis as large. So when it comes to minis, you have to think about it as large, okay? Or we'll just say big, you know. Minis as big, right? Just think of minis as big. Big account activities. Micros exactly sounds how it sounds, So for smaller accounts. So micros are smaller accounts. I know minis kind of sound the same, but When it comes to minis, it does sound small, and micros, but micros is actually the smaller accounts. Minis, on the other hand, are big account activities. You know, big account. So just put this in your head: big account, micros, small. I mean, big account, minis, small account, micros. Okay. I'm gonna type this. Well, if I could, um, minis equals big, micro equal small. Small, right? Now each future contract has a minimum price movement called a tick. Okay. A tick is 0.25. So there are 4 ticks per dollar, right? 1 full point per dollar, which is 1 full point is $1. So 4 ticks. So the tick is 0.25, right? As we're right here, seeing right here. And then the tick value is 12.5. And if you break that down, right, that's 4 ticks for a point. Is that really valuable? No, but it's important to know. So you divide that. Okay. What's valuable here is what's valuable here. The reason why I'm teaching you guys this because what's valuable here is what you're trading. It's valuable to know how much what you're trading moves per dollar. Okay. So for example, ES tick size is 0.25, tick value is $12.50 per contract. 1 full point is going to be $50 per contract. Okay. So for every $1 on many ES moves, you're going to make or lose $50. Make or lose $50. Okay. ES is going to be 1 full point equals $20. So for every $1 or 1 point moves, you're gonna lose or make $20. Okay, if that makes sense, because YM 1 full point is $5. Okay, so every point move up or down, you're gonna make $5. Okay, for every point. And the same thing as RTY, exactly the same as ES. You're gonna make or break or lose $50 for every $1 goes up or down. Gold as an animal is going to be $10 per tick. Okay, per tick. This is different because the tick size is 0.10. It's based off the ounce. So when you have 120 ounces, the contract of a gold contract, because it's weighted different, the tick size is basically different, if that makes sense. The tick size is 10. That's why you see the tick value is $10 per contract. So when you do 10 times 10 equals 10, that you get that $100 per contract. Okay. So it's very volatile. Okay. So for every $1 gold moves, you're gonna make or lose $100. Okay. So everybody picking up what I'm doing, like I'm putting down here. Right, if that makes sense, right? So so that's basically, and it's important to know these tick and point value system because it's critical to know for risk management. Okay. And then and then the beautiful thing when you enter futures is that when you is when you enter options first, I would say first, when you enter options first, uh, we can narrow it down to a good science, right? Say, hey, if we enter our options contract, my stop is not, say 550 on QQQ. I'm risking, let's say, 10 to 15%, okay? Let's just guesstimate, guesstimate. But with futures, the risk weighing a risk management, I should say, is defined, right? So if you enter ES and then you have a 5 point stop, right? A 5 point stop, 5 points. No matter what, no matter what, you can't lose more than 250 bucks because it's defined. Say NQ, say on NQ you enter a trade and you have a 10-point stop loss. All you're gonna do is multiply by 20, and then no matter what, you can't lose than $200. If it comes to risk to reward, the risk to reward and overall risk management with futures, it's a lot easier to keep risk in check because down to the cent, which you're losing or making before you enter, right? Because like your risk. But with options, it's gonna be hard because of the Greeks and everything. Because if you're gonna catch a 50-point trade on NQ, that's $1,000 trade, right? Like on the penny. If you lose 25 points on NQ, that's a $500 loss for you. So always it's going to be down to the cent. What you're going to make or lose, like say for example, like like down to the cent, you're going to make which or lose, right? Which is a massive pro from like options. So hmm, hold on. How do I? So next, so next is a lot of people think, oh, different markets. Oh, a lot of people say you you can only trade indices. You can only do this. This is completely false. Okay, so you could trade ES, NQ, YM, RTY, gold, oil, coin, cattle, euro, yen, pound, treasury, bonds, Bitcoin, Ethereum, Solana, XRP. You can trade everything under the sun. So that variety is there just as it is in the stock market, right? And the beautiful thing about futures is that there rarely there are rarely like liquidity issues. If you trade a certain name, let's say for example like Tesla, right? Or you trade something like Adobe like stock, right? You're gonna run into like liquidity issues on the option side, which are gonna be hard for you to execute. Futures, when it comes to indices, specifically, you can buy market no problem. You can do anything you want in terms of execution because liquidity is there always, like always, right? So that's another massive plus with futures. But in terms of different futures markets, the variety is there. So yes, you could trade these on prop firms. Now, why trade futures? You have the same opportunity to control larger positions with smaller capital, if you get what I mean. Or you can use props or even smaller capital to maximize your risk to maximize your risk to your reward in every scenario. Just as I spoke about in terms of liquidity, right? They trade nearly 24/7 with features. They trade 23/6, okay? 23/6 with very tight spreads, okay? Um, oh, sorry, I'm getting tired. But Massive Pro is the risk aspect for trading props, knowing exactly down to the penny what you're potentially making or losing. Okay. Um, Now, lastly, risk. What risk do you take on when you're trading futures? Now, when you're trading futures with personal capital, yes, you do inherit some risk. That is because there's a margin requirement. So the marginal requirement to trade futures with your own capital on Webull or Robinhood, because Robinhood they have it now. Um, Webull specifically though, Webull specifically though, you can have $1,000 in your account and trade a mini. But if you at any point in time your position gets under that $1,000, they can they can liquidate you. You know, because what happened is you're gonna lose whatever you're down. Okay, so technically you can't lose 100% of your money. You're gonna get liquidated first, but in terms of trading with your own capital, you'll always want to pay attention to the margin requirement. That is very important when it comes to prop firms, right? But when it comes to prop firms, right, they eliminate 90% of the risk of futures. Your risk equals what you paid, basically. That's why when I say when you're trading on your own capital, the risk is more and it's higher than trading with a prop firm because like you're only risking with a prop firm what you paid for. So point blank simple, if you buy so if say for example, if you buy a $20 eval from Apex and you blow it, guess what you just lost? Guess how much? 20 bucks. $20. If you buy $20 eval, you pass it, you pay the activation fee, which is like 150 bucks or 160 bucks. You're all in for 160 bucks. You blow that account, you know what you lost, 160 bucks. Or if you add it, 150 plus 20 from the eval. So maybe you just lost like $180, right? So you just lost $180. You know what you lost compared to options or compared to trading with your own capital. You know you know like the risk is less. The risk is extremely low with props, okay? So which we're going to get into here in a moment, but now what I want to talk about here is I want to talk about what you guys should know as a beginner, if you are a beginner. Number 1, start with the prop firm, right? Start with the prop firm, okay? Cost of barrier entry is very low. Cost of learning is very low. So many of the boys in the chat, they like prop firms because the cost of learning is very low, and then but you have the same reward as your own capital, and you're getting more just to learn while you're getting money, right? You're learning how to get money, and then the money just follows. As I stated, make sure you guys make sure that you study that tick sizes for what you're trading. Mostly, most important, like, is going to be that point value if you're trading with your. But if you're trading with your personal capital, make sure you know the margin requirements for what you're trading. Okay. But most of you guys are trading props, so like, but yeah. Anyways, 3, use risk management. Your risk management should be according to you and your account size only. Okay. No one else's. Because I gotta tell you this, when I'm trading with you guys live, that my risk is different compared to your guys' risk. So when I'm down like $300 to $400, I'm comfortable losing that much when I'm trading futures with you guys, right? But when it comes to some of you guys feel uncomfortable. You're like, dang, Jello, you guys are you're losing that much. Like, how am I gonna get back from that? I know what I can get back, but you guys need to know what you guys can get back, because you guys have to, you know, size appropriately towards your account size or what you guys feel based on yourself. Say for example, if I'm trading with you guys, if I'm trading with you guys, if I'm trading with you guys, if I'm trading a mini, you guys trade a micro. Okay. If you guys trade, if I trade a mini, you guys trade, you know, a micro. So the risk is less for you guys. If you guys feel convicted and then you know the trade's gonna be right, then you guys trade. If you feel comfortable, then trade a, a mini with me. You know. But all right, so what I would recommend though was I'll narrow it down to 1 to 3 tickers. Narrow, like basically narrow it down to 1 to 3 tickers, NQ or MNQ, MES, whatever it may be that you're comfortable with trading and how they move. You know, like, and focus on those. So you could rotate between those three. One of them is gonna have value, and one of them is gonna have value another day. But focus on, like, this is the thing, right? Just like anything in life, you know, if you focus on 10 different things, a couple of them are gonna be lacking, right? A lot of them are gonna be lacking, right? Like just like basketball, like if you focus on so many different things, you're gonna, like, some areas are gonna m- like there's gonna be an area, there's gonna be so many areas you lack on. If you're gonna, but if you're focused on shooting, you're just gonna be a better shooter, if that makes sense. If you're just focusing on crossovers, you'll probably have handles like Kyrie. You know, if you just focus on handles and then finishing through the rim. But if you're focused on, you know, shooting crossovers, dunking, and you know, one of those are gonna be strong, and the other two are gonna be weak, if that makes sense. So if you focus on one or two things, you're gonna be really good at those one or two things. What's most important of it all is the continuous learning process. You know, so even me, like 3 years in this continuous process about myself, I'm still learning about myself as a trader. I continuously learn about different adapts, how the market's been adapting lately, and from adaptions I needed to take in the market. So, so it's a continuous learning process, and a lot of traders fail when they feel like they have it. Like, people fail, a lot of traders fail because they think they have it. You never have it as a trader. I'm gonna tell you this. I'm gonna keep it a buck 100%. Like, you never have it as a trader. It's just your time that you are performing well. That's why a lot of people, you see all these people are rich and everybody, you know, you see these gurus on, you see a lot of, like, the trading community. They're all, it's just, you see all these rich people. You see them flex on everything. You see them flex their trades, and then they're driving like Lambos and stuff. But for them, you have to think about it, not that they're rich and that it became from trading. Yes, it was from trading, but it was just their time that they were performing well. So, you know, it's like there's ebbs and flows across the board. One day you'll be at high, next day you'll be on a low, you know, next day you'll be on tilt. So we were on a, so the past 2 months, for me at least, though, we were on an extreme high for the past 2 months, right? For the past 2 to 3 months, it didn't take damn near a single loss for 2 months. Our smallest winning trade was like a smallest winning trade was probably like, what, 50%, like, you know. like maybe like 200 bucks. But our highest is probably like almost two bands to 3,000 on end. So I mean, if you guys traded this week or last week, I kind of struggled a bit, but but that's okay. That's part of the game. You're gonna struggle. There's gonna be a week that the market's gonna be good, and then it's gonna do you good, and there's gonna be a market that doesn't. Like, there's gonna be a week that it doesn't do you good. But at the end of the day, you just have to keep your risk in check, because I understand that. It's part of the game. Just like the market moves in waves, we perform in waves. You can't perform at a central high, you know, like 252 trading days, because there's 252 trading days in the year, right? Like, there's no way you're going to be 100% or 90%. Well, you can if you have the discipline, the real, like real discipline. But majority of us, we're going to trade every day. We're going to at least trade once or twice a day, like on max. If we don't trade, we're either going to trade maybe like 2 or 3 times a week at most, you know. But, there's going to be some lows, there's going to be some droughts. That's just the way it goes. So now I want to do here is I want to over I want to hop over to the prop firm questions. I know you guys are asking a lot of like questions about prop firms. So, and I know some of you guys are new to this. So let's go into that. Okay. Hold on. The prop firm search. I'm gonna go over to the. Hold on. Let me check on my other PowerPoint on this side. I'm gonna go to this prop firm. All right. Cool. So, bada bum. So with the prop firms, right? These are the main questions I get. So, and then I'm pretty sure everybody can see this, right? All right. So what is a prop firm? A prop firm gives you access to capital to trade futures. Instead of risking your own money, you trade their accounts. After you pass the evaluation and follow the outline rules, you can get a payout. The valuation works. You pass a simulated challenge where you hit a profit target without breaking their rules. Usually they have a trailing drawdown. Once you pass, you get access to a funded account. Once you get funded account, you trade a certain amount of days and you get your payout. Make sense? I want you guys to understand something, and I'm gonna make this a little bigger because I'm trying to draw in here. There is no better risk to reward as a trader than a prop. For example, let's talk about a Apex, right? Apex. Can you guys see this? I think you guys can see this. Apex is account size is $20. $20. Activation is 140. All you're seeing is 160 bucks for one account. Right? Your first payout, your max, because the max payout is $2,000, right? That's almost a 12x return. 12x return your payout. So you can withdraw 2,000 every 8 days, right? You can also have up to 20 accounts. That's the max for Apex. So every 8 days, you can get a 12x return on your like that's a 12x return on your money. So for every 8 days, you can get 12x. You could basically get a 12x return on your money every 8 days, which will put you about 30 times your return on your money every, if you think about it, every 30 days. So 30x return on your money every 30 days. And then remember, this is just one account, but if you did multiply this with 20, that's like a lot. That's a lot. And then you're only risking 160, you know, you're only risking $160. Like that's insane. Only risking $160. So, hey, I'm not gonna lie. Okay, so fun fact. Since we're talking about prop firms, so I was um I was against prop firms for a long time, and the reason why I was so against them is because I was educated. So many of them, like Glenn and Ellis and everybody else, they were telling me and bugging me to get a prop firm, and then I was just naive. I was ignorant. I was just uneducated, and I was ignorant to the fact that we're like like I was ignorant to the fact that there was a different vehicle I could use to trade. All right. So there is a bad stigma about it around prop firms because there's a lot of shady shit out there. Like there's a lot of shady ones out there. But when you do your, you know, because I've done my due diligence, I've got a payout about I got about $8,000 payout from Apex already. So around 1.2 million, like so like some people got like a 1.2 million payout, something like that. Like like it's insane with that 20 accounts. So and then 20 accounts that's copy traded. So that's the risk to reward there. But what else am I missing? And then because a lot of people also when it comes to trading, they either are trading a simulated account and then they would like it's hard to trust the trading community sometimes because you can it's hard to trust the trading community because it's hard to like trust them. You see a lot of people on YouTube and you think they're making that much, but little did you know it was just a prop firm, and then they're just flexing their prop firm, but and then they're either renting a car or something, but they're just trying to rep their their Discord, They're trying to rep their Discord. They're trying to rep everything. But what I'm trying to tell you guys here is, I'm just doing this for free for y'all. I don't want no money. I don't want no money. I just want you guys to learn and earn. At the end of the day, I want everybody to be as a community and help each other. Like, and and then like that's why a lot of people, yeah, you guys need to just try trust the process when you guys are trading. Um, like the risk to reward here, you guys are learning to earn when it comes to these prop firms. So it's like, you know, like the return is so good once you're learning. It just don't mess up that performance account. Like you only paid like, so for example, if you paid like $3,000 because, say for example, the risk to reward here is like $160, you multiply it, 20 accounts, it's gonna be like $3,000, and then your first payout could be 50,000, 55K if you copy trade all this 20 accounts, on Apex. So your first payout is gonna be 55K. Like bro, from $3,000 to a 55K payout. So you subtract 55 to 3,000. That's like a $52,000 return. if you don't mess that up. Like that's like a 20x return, like 18, like 18ish, something like that. But when you guys are trading futures, but with this one, most of the time you guys are gonna have like 1 to 2 accounts, which is like $2,000, and then that $2,000 you're getting that every 8 days, which is like basically biweekly. That's like your a biweekly check you get from wherever you work at, right? But that's gonna be $4,000 a month. This one's gonna be a $4,000 a month because you're getting this you know, every 2 weeks. You're getting a $2,000 payout. That's like $4,000 a month. So at the end of the year, you're basically like 48K for just only one account. That's $48,000 a year. You multiply it. You have two accounts. You're gonna have 96,000. I think about 90K plus for the whole year if you stay consistent. You know. So the risk to reward is a no brainer. You know. And then you still get to trade live in the market if after that that six payout you get to trade live and then the rest is yours 90% and then 10% is theirs. You're learning and you still have the same potential to earn if not then you would with your own personal capital without risking your personal capital. you know it's a no-brainer no matter how you look at it. Like that would go to number three. What is the downside? What is the downside? So like what's the benefit of using a profit instead of my I just said, it's a no-brainer. So you basically what you lose for in the evaluation, or the other downside is you just you lose that money that you paid for the performance account because you failed the performance account. That's the other downside. But there is no other downside to it when it comes to risk to reward, like from like you basically if you guys are sneakerheads, if you guys are sneakerheads, you guys buy like damn near $200 $300 shoes, Jordans and shit and stuff. Like when you guys put that $200 $300 here, that's like double your money. Instead of buying those Jordans, you could probably buy like 20, like maybe like 10 J's with that, 10 Jordans with that, like like off goat. So the risk to reward is there. But yeah, yeah, instead of your own capital, yeah, you have access to larger buying power without risking your own money. The fixed downside, like again, I said, you just only risk what you paid for. You have the potential to scale multiple accounts, just like I said earlier. That is absolutely uncomparable to anything in terms of your own capital. Like I always keep saying and repeating like so many times. Like and then Apex is every 8 days. And then if you guys do take profit, I think and then there's alpha futures. There's so many different ones. There's alpha futures, Apex, Bullnox, Top Step. Um, but what I'm more educated about is going to be alpha futures and Apex. That's my main ones that I use right now. At the moment, I use some Top Step. I passed an account. I passed my friend's account because he was in the Philippines. But Top Step was cool too. It's the same. They use Project X as their trading platform. I like their platform a lot. Um, but those are the companies you can use to trade futures like prop firms with. Apex, Bullnox, Alpha Futures, Take Profit Trader, and Top Step. And then Apex, there's a lot of like different rules to different prop firms. So for like Apex, for like Apex, there's no consistency in the evaluation, the simulated one. But for like I think Top Step, they have like a consistency rule, I think, or like you just can't make over 1500. You can't pass in one trade, I think, with Top Step, I believe, or it's Alpha Futures, I'm pretty sure, but you cannot make more than 1500 to pass. So basically, in a sense, you can't pass in one trade because I think they're just trying to like avoid you from gambling or something. But so, anyways, fun fact for you guys though, if you guys ever have a question about a prop firm, go to ChatGPT. Me and Ivan, the homie Ivan, we use ChatGPT. Like, I'm just gonna like straight bluntly say that I use ChatGPT. I promise you, you'll get the quickest answer possible than anybody in the world. That is a fact. Like, like you can ask them right away because ChatGPT is fucking awesome. I promise you that. I will lay it out, but I promise you, I will lay it out for like like it it's like ChatGPT will lay it out for like dummies. I'm not saying you're a dummy, but that's how it breaks it down. Like it's easier to break it down on ChatGPT. So risk management in terms of props. So what is a trailing drawdown? This is a risk limit that moves up with your unrealized profit and trailing from your highest point. So let's say you have a 50K account, right? Drawdown is 2K. If you go up plus 2K a position, and then you go back break even, you will you will you will fail that account if you go break even, right? If you break even. So you go up 2K, and then you lose, and then you go back break even, you're going to lose that account. You're going to fail that account because your trail was your highest point. So since you were up 2K, then it came back to break even, you will fail that account because it trails from the highest point again, like I said, because it came back to break even, you will like fail that account. So when you're trading with the trailing drawdown, what I encourage is to take profit into upticks, right? Like you'll fail this account. Take profit into upticks, take profit into downticks. Don't let the stock bounce on you. Just take profit, scalp your way over, and wait for an eval passer and get over the hump. Okay, that's what I would say for you guys. Once you exceed your trailing drawdown, which is going to be trailing drawdown plus $100. Once you get above $2,100 on a funded account, there is no more trailing drawdown. Like, what happens if you break rules? Violating rules like the 30% rule on Apex will result in the payout denial. That is the rule to worry about. That that applies to both ways. So 30% up and down. You cannot lose 30% of your total drawdown in one trade. Let's say a 50K account and then your drawdown is 2500, you can't lose more than 750 in one trade. You could lose 750 in one day, but you can't lose 750 in one trade. If you do lose 750 in one trade, that's okay. You're just likely gonna deny you a funded account. Eval, you don't have to worry about this once you're in the eval stage. But this is only for a funded account on Apex once you're in a performance account on Apex, okay? They have a 30% rule up, 30% rule down in the funded account. The 30% rule means up means at the time you request, so after so after so after so after 8 days, 8 days you can request a payout. Your biggest profit day cannot exceed 3%. So if your total profit is 5K and then your biggest winning day is 2K, that exceeds 30% of 5K. So your biggest day is so if your biggest day is 1.5K, you'll get denied. So if your biggest profit day is 1.5K, you are good to go because that's less than your total profit. Okay? If that makes sense. So now our newest events restricted. So when it comes to funded accounts uh on like Apex, on Apex I think you could do whatever you want. Yeah, Apex you do whatever you want, but on some other prop firms you can yeah, so on Apex there is, but on Take Profit Trader like that they don't do news like say CPI and everything. Like so like yeah. So I think that's pretty much it. Oh, hold on. I gotta get over it, but I didn't add the slide. I don't think I added a slide. So how much can you with the so so how much you can make with the funded account? So let's say let's say it's a 50K account. As we said earlier, you can withdraw 2K, $2,000 every 8 days. After your sixth payout, you become uncapped and you can withdraw everything, anything. Take a profit trader. There's no cap. There's daily withdrawals. What platforms do you trade on? I highly recommend Tradeovate. I like Tradeovate the most. It can link to your trading view. That's what I personally trade on. I think the most efficient Rhythmic, but I wouldn't recommend though. And NinjaTrader is like if you see any NinjaTrader or Rhythmic, just stay away from it because I think NinjaTrader is outdated and clunky. Outdated and clunky. I would say like Tradeovate is best to use because you can link it to TradingView. TradingView is nice and it's more it looks more better. If you guys are trading on what's it called? The boys put me on. If you guys are trading on like different prop firms, I personally think like if you're trading on Alpha Futures or Top Step, get the Project X. Project X looks so nice. I like their platform a lot. It looks nice too. So if you guys want to do that, you guys can tap in that also. And then yes, so basically so evaluation account. So I'm just gonna break it down like in overall because this is like almost an hour already. Like I'm just gonna like I don't want to hold too much of you guys' time. I already did probably. Evaluation challenge is a test account. You must pass that before earning a funded account, which is basically a performance account. A funded account is a live account with firm capital. Once you pass the evaluation, you get a payout. Payout is usually 80-20 split between you and the prop firm. A reset is when you pay the restart evaluation. If you fail, you have to restart from square one. Um, scaling accounts mean you have accounts. Say like I have one account here, one, two, three accounts here, and then I got like two more alpha features. That means you're scaling your account. So that's scaling your account. So like you get a potential higher payout. Um, that's pretty much it. I have a lot of stuff planned for you guys after, like at the end, like next time. This is just an intro to features from what I know. If you guys want to like learn from me, this was my breakdown. So yeah, you guys have a great Saturday. You guys have a blessed day. Just make sure you guys tap in with us in the Discord. We'll be live every day. Not always every day, but majority of the time every day. I'll see you guys on Monday or on Sunday. I'm gonna make a little video on Sunday, but I'll see you guys on Monday. Okay, if you guys are gonna be in the chat. All right, peace, everyone.